Today's company presentations are brought to you by Red Cloud Financial Services and the team at Red Cloud Vancouver. Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs. Tune in every Thursday at 4:15 p.m. Eastern, 1:15 p.m. Pacific for weekly corporate presentations. For more information, visit redcloudfs.com.
Good morning, everyone. Happy Wednesday. Welcome to Digging Deeper. Today, it's a real treat. We're going to be doing a thematic talk, a whole theme on a sector, lithium, but specifically, we're going to be talking about direct lithium extraction, what investors need to know. And it's a real treat because we have a mining analyst and engineer, CFA. We got Koby Kushner on with us from Red Cloud. We're really looking forward to having this conversation because they put out a report last month. We will have the links below. I want you to make sure you read this. It's outstanding. And we're going to go through just the lithium sector and what the promise of direct lithium extraction and the hopes of it are and how this can be real disruptive. Welcome to the show, Koby. It's the first time to have you on here, and we're real excited to have this conversation.
Yeah, thanks for having me. I'm excited to be here.
Good stuff. All right, let's just go right into lithium. Let's just start and go. If someone is a generalist and they understand understand the battery side, I know that they're using EVs. Where do we get lithium from? What's traditionally, where is it coming from, and where are we going with it?
Sure. So traditionally, lithium comes from two sources. The first is, we'll talk about brines. So brines predominantly in South America, Argentina, and Chile. And that's where you're getting these saltwater lakes. And there's lithium inside of it, in lithium within these lakes, and you got to pump that out from the salar or the salt lake, and you put it in these large evaporation pools, these shallow ponds on surface, and essentially you're in the desert. You got to let the sun do its work. Sun does its work, it takes out some of the water, and you're left with a higher grade lithium concentrate. The other approach, which is what we see in Australia, and it's actually Australia is now the biggest producer of lithium, is from hard rock sources. Traditionally, you find a mineral called spodumene. There's other minerals too, but spodumene is the dominant one, and you find that in these geological features called pegmatites, and you mine it out like you would any other ore body. And you're left with, traditionally in Australia, you're often left with a concentrate of spodumene, which then you ship off to, say, China for downstream processing.
So, I mean, one is kind of your traditional, what you think of mining, like a big mining project. And the other one is if someone's seen pictures of in Peru or Chile, where it actually looks kind of beautiful, these huge ponds, different color, and they're baking in the sun. It's a lot of land use, and it's a lot of just baking in the sun. You may have seen pictures of that. If you look online, you'll see these kind of like large expanse of different colored ponds, evaporating to create lithium. That kind of gives people a bit of an image of, okay, we've got basic mining, your hard rock, and then you've got this other. What matters about these salars and this saltwater brine, I guess, is key because it's kind of steps us into, well, what's direct lithium extraction then, and how does that play out? Because we're talking about brine, but in a different kind of way.
Yeah. So what to add on to what you're saying, direct lithium extraction, it applies to brines. You're right. And what it is, it's a selective way of isolating lithium from the brine without relying on evaporation methods necessarily. So there's different types of DLE, but they generally fall into three broad categories, and they all rely on using some type of sorption material or resin. In an analogy, I like to think of it as a coffee filter. You know, when you're making your coffee and the beans, the grounds coffee sit on top of that filter, and then afterwards you wash those coffee grinds off. Those coffee grinds would be like your lithium ions. Of course, the process is totally different. For one, it's not so much a physical process. You know, it's more of a chemical process.
Yes, yeah.
Really.
But it's an interesting concept because you could say, okay, you know, in theory, you can go downstream into something, filter out with your coffee cup kind of solution or your sorbent, capture what you want, in this case lithium, and let the rest flow back in, and actually pump the rest of it back in underground or wherever you're going to be. That's, I mean, we're going very top level. We'll keep as much of the chemistry and the engineering down as much as possible. What the promise with it is that it's less water usage. It's obviously incredibly less land intensive. It's, you know, less than 5% like that of land use, and you're getting to put that brine solution right back into the ground where it was at the end use.
Exactly. You know, there's opportunity to just re-inject the lithium void brine back into the aquifer or reservoir or salar, whatever you want to call it. And all you're removing really is the lithium.
And the reason why this is a game changer, and then we'll jump into kind of the overall lithium demand and market, why it matters, is that not only is this disruptive in the sense that we have companies in Alberta that have lots of promise with existing brines from oil and gas wells and whatnot. This technology can really open up what's already there, but do it under that ESG model, or even if someone doesn't like the term ESG, do it in an environmentally friendly way, where once again, the time, you're able to do this within sometimes hours instead of months and months sitting baking in the sun. Where you're able to do it without the massive cost of a hard rock mining process. It's typically, if everything works out well, and with these companies, it's already used oil and gas wells. You're going into existing infrastructures, and you're not using a ton of water. So in a lot of cases, you're going, oh, there's a lot of win here. There's a lot of win-win-win.
Agreed. I mean, I think you hit the nail on the head. It's really disruptive for a multitude of reasons, and you touched on the ESG aspect, right? You're not building some large open pit mine. You're not creating these massive evaporation ponds on surface. You're creating, you know, these small, relatively small processing facilities, and then you have wells, and these wells connect to that central processing facility.
And before I get into why that's also exciting for Canada, I mean, it could be a huge deal in the entire shift in energy, and the also opportunity for, say, Alberta, Saskatchewan, who are very oil and gas intensive, to be like, hey, listen, there's a very strong prospect they could be leading the charge in this new shift with lithium and with batteries as well. That's a huge story. Let's take just a big jump back though, and talk just about lithium supply and demand. But let's just keep it real basic. People understand supply and demand, and say, like, and I like to always talk about the Goldman Sachs thing, where they kind of were talking about, oh, there's going to be a lot less demand, and we'll eke that into the conversation. So give me your thoughts on supply demand here.
Okay, so my thoughts are, and if you want, you can pull up figure 2 on my report there. That's on our report, sorry, that's page 2. So this is from Benchmark Mineral Intelligence. In my view, they're the leader at forecasting supply and demand. They have a good idea of, you know, battery capacity and what battery plants are in construction, which ones are coming up. So they have a good idea of both supply and demand side. The issue here, and you can really see it in this graph, is that it's the gap between supply and demand. It's magnifying. The fundamental issue here is that the timeline to bringing on new battery capacity is so much shorter than the timeline to building a new mine. So, you know, that's why you have this magnifying problem. And our view is that demand's not going anywhere. We don't see, if anything, EV demand is just ramping up. And then on the supply side, yeah, supply is going to increase too. We have the higher lithium prices to incentivize it, but it's very hard to do that, to just scale up. And why I think DLE is so disruptive here is because the bottlenecks that hinder scale up of a traditional hard rock mine or even a traditional evaporation brine don't necessarily apply to DLE.
Okay.
So if you think about, what dictates your production rate, and this is more me putting on my engineering hat now for a hard rock ore body, all else equal, it tends to be the geometry of your ore body, right? Your production rate is limited by the geometry of your ore body. With evaporation brines, your production rate is limited by your evaporation rate, and therefore how much real estate you have for your evaporation ponds. If your evaporation rates are bad, you might need much bigger ponds. DLE doesn't have this issue, right? So it could simply be a function of drilling more wells if you want to scale up production. And you touched on the brines in Western Canada. So not a lot of people realize this because people think lithium brines, I think, of South America. Canada has a lot of lithium in brines, and it's within, I'll say it's below Western Canadian oil fields. So it's very data rich over there. There's thousands of wells drilled all over the place, both in Saskatchewan as well as Alberta, of course. And we have a good idea of the subsurface hydrogeology, whether it's feasible to actually get lithium brines out from these reservoirs.
I know this is interesting because it's a good follow-up question, and it's not necessarily engineering, but it's more like assays. So with a hard rock, people are looking, it's always assays are key, and what's the grade? So what's the grade of the lithium, and what's this, and what's that? Mm-hmm. Here, it's not necessarily the grade. It's the flow rate and some other factors that are really critical with this, right?
Yes. So that's one part I do really want to bring home here, because it's a new concept for mining investors. Mining investors hear the phrase "grade is king."
Yeah.
Right. And it makes sense. All else equal, you want to mine less material and get the same amount of metal. Of course, it's going to lead to better margins, lower OpEx, better margins. It's not the correlation between grade and project economics for these DLE companies is poor. Rather, we think what's more important, and investors should be paying more attention to this, is deliverability. Because having really good deliverability can more than make up for your low grade. In the report, I bring up an example of Project A and Project B. And I talk about how Project B has double the grade as Project A, but a sixth of the deliverability. And these aren't unrealistic with regards to what you see, right? So if you want to reach that 20,000 ton a year lithium chemical production rate, which seems to be the target, you need to drill 3 times the number of wells if you're Project B. So in Western Canada, it costs anywhere between $2 to $4 million a well, give or take. That can absolutely crush your capex, and because now you're drilling 3 times the number of wells.
Yeah.
And now you're also needing to operate and permit 3 times the number of wells, so it also hurts you on the OpEx front. And yeah, you have it up here. You can see the grade, and you can see how it doesn't necessarily translate to project economics.
Yes. So this also taps into that scalability question, because there was before I jump into scalability, one of the things I wanted to kind of highlight was the region you're in, because we've got a couple different companies up here. With Lake being in Argentina, we've got Germany, and we were talking about Alberta. It seems to be that DLE isn't a one size fits all. So the dream would be you've got some sort of mobile type of unit that you could just move, plop, 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 and works everywhere. And it's just universal. That doesn't seem to be, at least at this stage, what it is, because each brine is chemically different and the absorption rates might be different. So maybe you could touch on that, why region is key here as well.
Yeah, it's not even just region. I'll say you hit the nail on the head, right? DLE is not a one-size-fits-all solution. People have this idea where they want DLE to say like, oh, DLE either works or it doesn't work, and the answer is not binary, right?
Yes.
So the
Yes.
question they should be asking is whether a particular DLE solution works for a particular brine chemistry. Brine chemistries vary, even within the same jurisdiction, they can greatly vary. And
Okay. Yeah.
therefore, your DLE technology needs to vary as well. It needs to be tailor-made for that specific brine chemistry, or at least modified to suit that type of brine chemistry.
And now what I'll just to be kind of the throw a wrench into this as well, as because this is disruptive technology, a lot of companies, they'll share some data, but they're also not that excited about saying, here's everything we have, here's what we've got, because they don't want to give it away. So there is, so for even a retail investor, and sometimes I've seen this in short reports where they'll point this out, they're not wrong, is that there's not entirely clarity. They're getting better, that said, and there are 2 new news releases for companies out that have some great numbers, but there is some of that protectionism of, we believe we're onto something and we're not too comfortable sharing too much of it just yet.
Absolutely. I mean, the thing with, we brought up the 3 broad types of DLE categories, and one that I'm seeing a lot of investment go into is ion exchange in particular. So with ion exchange, there's that, your coffee filter, as I described it in my analogy. So that's really the sorbent material. Ion exchange, the process is well understood. It's what you use in your house to soften your water. It's what's used in half of all of uranium mining. That's what ISR mining is. But what's proprietary is the sorbent material. Companies keep this close to their chest.
Yeah.
Right. They're competing, and they're not going to give you too much information out of it. They'll give you the test results, which is great. But I mean, I agree. It could be there is always an added level of risk in the sense that, investors don't truly know what the sorbent material is.
Yeah.
It's important to consider, test results aside, they might talk about having thorough testing, thousands of cycles completed, 99% recoveries here. That's all great, but you also need to assess, can this sorbent material, is it easy to manufacture? Can you manufacture it in high quantities? Because the sorbent material is a consumable for your final operation at the end of the day. Can you manufacture it in-house, or do you need to source it from China?
Yes.
Can you manufacture it on site, or do you need to ship it in?
Yeah.
So, some companies have shown that they've been able to get third parties to make a commercial scale sorbent, which is encouraging. So, it's things like that we also have to ask ourselves and ask management.
And one way that someone, I guess, could mitigate that risk, because I mean, everyone wants like clarity, but at the same time, there's very few people who are, say, chemists and chemical engineers who, even if they had access to the full reports and data, would necessarily understand it. Most retail investors wouldn't. So they can find some comfort or solace, and I won't name any company names, is that they may have done deals with larger companies that kind of go, oh, okay, they've attracted XYZ. That means something. Or, and I will mention, say, Lilac, because it's private and you can't buy it. Lilac, which is on the DLE side, raised, I think, 250 million. Was it 6 months ago? I mean, and is that Bill Gates has partly funded that one as well? Like, this isn't, it's not small change. It's not, it's not some wild west type of thing all on its own. That's not what we're talking about here at all.
There's never been more money flowing into this technology than ever before. And then the space has also gotten super competitive. There's like at least 50 DLE technology providers all trying to achieve the same thing.
And with the great thing, say, and I mean, I love the Canadian angle, and we've got lots of hard rock, but the brine angle I like, because we often hear, like, especially with Alberta, Saskatchewan getting picked on quite a bit for oil and gas, is this has a chance to transform Alberta and Saskatchewan and make them a key player if it all works out. And that's big good news for Canadian investors to say, listen, you can get involved in this, and you could also be backing Canada, and it is an environmentally better way than what we've got. If once again we're assuming this all works out and it all seems to good flow rates and whatnot. That's the promise of it, or that's the hope that I find really exciting. And you're able to go back into these wells and repurpose them, reuse them without a ton of water usage, certainly no extra land usage. And Alberta, generally speaking, pretty good on permitting. So there's a lot of upside. What's something you think other than that an investor should know, or kind of if they're going to do some research on their own along with your report, what else should they kind of consider?
Yeah, so I think at the end of the report we kind of touch on it, but and I think we alluded it during this conversation, Andrew, is that it could be very tough picking the winners, right? Unless you're a chemist, how do you assess the DLE technology? Unless you're a reservoir engineer, how do you assess deliverability? So when for us, we usually recommend investors pick a basket of companies if they're trying to get exposure to the DLE space. We don't recommend investors hold on to any single one. The other thing is, I do want to point out that there's so many DLE technology providers come in. If you're trying to get exposure to these DLE resources, we have to keep in mind that a new technology might come out tomorrow, and that might be the better technology that these resource companies might go with.
Yes. I guess that's another strong sense for if you have the land package and you have the brine and you're finding that, yes, we have lithium here and we seem to have good hydro testing and good flow rates, then an argument can be made. We don't need to worry about the DLE side. Someone's going to solve that for us.
Yeah, by no means am I saying don't worry about the DLE side. Of course, it's very important.
Yes.
It's the difference between being able to profitably extract this lithium versus not. But I guess I do want to re-highlight. There's other factors at play.
Yes. Yeah.
And I can touch on the grade again. In Western Canada, grade's really low, but it's low compared to evaporation brines. So, to tack on to why this is so disruptive here is because if I'm comparing it to traditional evaporation, you need usually a 300 milligram per liter is your minimum grade that you need for evaporation. Otherwise, you're just waiting. You have to start off with a higher grade brine, or else you're just waiting way too long for the sun to do its work, right? You're already waiting months as it is, and you're only getting 40 to 60% recoveries. So, it's really important to start off with a high grade brine. DLE, you're not limited by evaporation rates, right? So it just doesn't make sense to compare the grade of what you see in Western Canada to these salars in Argentina, for example.
Because in part it's because is it in part because you're talking about a 6-month wait compared to an hour? Like you're flowing this through very quickly. Over here, you're hoping for hotter, drier, and better evaporation rates. And that, all things being said, even if we were competing, because here's a salar, which is a great photo of what a salar looks like. Let's take even the competing out. Is that makes it attractive in and of itself, and that this doesn't even necessarily mean that DLE is going to compete and take away from other projects. Is that this demand curve that we originally talked about? There's a gap there anyway, and if we wanted to say this project here and go, okay, can we double the land package of this? Like, whoa, you're gonna get some pushback pretty quick. And not only that, you touched on as well, and I just want to highlight this. If it's a hard rock, okay, say we have a discovery and it's like, whoa, that's a monumental hard rock discovery in Quebec, say. Go, well, okay, say from today, what would you say is your typical, lifespan before that becomes a mine? Like 7 years?
Could be years and years away. Yeah.
5, 6, 3, 4, 5. So it's these types of things where it's like, oh, okay, so I'm getting it. This disruption could be very quick. It could happen quite quickly. And that's the promise of it, or the hope for it, is that you avoid those two situations that are very tenuous. And I think most people, except for Goldman Sachs, for whatever reason they have, most people and most all other analysts out there and research reports, and we read a ton of them, see demand being exceptionally high, and there's a huge gap, and it's like, where's that going to come from?
Yeah, agreed. And Goldman Sachs, they reference, I believe they were referencing like lepidolite sources as a disruptor in China, and it's like,
yes,
those lepidolite sources have been sitting there idle in China for a long time. There's a reason they haven't been touched. It's these are lower grade sources. It's harder to get battery grade chemical out of it. To suggest that that's going to disrupt the supply chain, I don't get how they arrived at that. And then the whole other aspect is of calling for a price correction. What was their timeline again? Was it by the end of this year?
And this year was
we're already in November.
I know. It was a 16.8 or 16.5. Gosh, I can't remember what it was, but it was something. I can't remember.
To suggest that prices are going to come down, like I agree. I think long-term prices will come back down, but to expect it to come crashing back down, while we have a bit of a lithium supply gap, and in that same time frame, that supply gap is expected to magnify and keep magnifying. How can you call? I don't understand the logic with calling for prices to come back down, to crash.
It almost seems like it's like a wishful thinking. If we put it out there, maybe it'll happen. We'll just put this idea out there, and maybe that'll happen.
But it shows the power that they have. Like it caused every lithium stock to go down, basically, after they put down that report. So,
and it's also a strange assumption given the political and social situations with China in general. Never mind the supply chain issue with China. You go, okay, so you're betting all of your efforts on China as being the one who's going to solve this problem. Whenever there's an entire other world out there, we haven't even talked about Australia. We've talked a little bit about South America, that is a major lithium producer, and not only that, leaves out Australia and South America. Doesn't even recognize that there's a DLE situation or that possibility, which could solve a gap very quickly. So that's the part that I think is very exciting.
Yeah, agreed. To put it simply, I don't think DLE will ever make hard rock mining obsolete. But assuming everything works as planned, assuming that this one operator I'm talking about that's eventually scales up from 20,000 tons a year to 150,000 tons a year, which is already about half of Australia's current output. So it's big. This company is not alone. There's a lot, not just Western Canada, but there's other companies out in Europe. And even there are also DLE resource developers in South America as well, and other parts of the world. They're all trying to achieve the same thing: bring new lithium supply to the market as quick as possible. So yeah, that being said, we haven't seen new supply yet, and in my view, the only thing that's going to cause a price correction while supplies are extremely tight is simply the introduction of new supply.
And I think one thing to throw in there too, with the U.S. being such an end user, they have one mine. Is it what?
They have one producing lithium operation. That's Silver Peak.
Yeah,
and that is, they don't. I don't know if they disclose their production rate, but I believe it's around 5,000 tons a year of LCE. So it's really nothing. It's really a drop in the bucket. The U.S. is still very heavily reliant on importing their lithium.
So here's the opportunity, I think, for people is that we're a resource country. We're finally getting a bit of recognition from the federal government. On Friday, they came out talking about uranium. They came out talking about some critical metals. Hopefully that's going to help convince retail and general public to go, listen, I want this green future. I want to look at batteries. I want to do this. Well, this is a way that someone could put their money where their mouth is and help not only have Canada lead the way in this. I mean, we really have a chance of really leading the way in this energy sector. And part of the reason we're not mentioning companies is that you're going to have to reach out to us, or you're going to reach out to Koby and get this analyst report from September, the thematic one. It's outstanding. It's like 60 pages. And there they do mention companies, so we're not going to mention them here. You have to reach out to us and you'll get it in there. but it's a great report. It lists some of the companies and their concerns, their excitement, everything. It's all in there. Koby, thanks so much for joining us. We'd love to have you back on talking about updates and how things are all going. But any last thoughts or any kind of last suggestions or considerations?
Yeah, I'll just mention, if you want to access our research, it is available on redcloudresearch.com. It's free to make an account and register for a login.
Perfect. I encourage you to do so. Great stuff, not just on DLE, but on every sector. So make sure you join in there. And thanks again, Koby. We look forward to chatting again with you soon.
Likewise. Thanks for having me here, Andrew.
Take care. Bye-bye.